Live long and prosper. No, can't do that. Howdy folks, I'm James. Welcome back to TradingView Explores. Today we're stargazing at the $400 billion space economy and the public companies therein. Space is a very exciting and by all accounts quite young sector. It's also crazy volatile, and this is coming from a crypto fan. What we've done for this deep dive though is strip out boring aerospace and defense stocks, all those private companies, as well as any business that doesn't generate the majority of its revenue from space related activities. Then we've gone into the space weeds, if that's the thing, on the ones that remain, the true publicly listed pioneers to the stars and how they're performing at the moment. It's not financial advice, and yeah, we know this video is super long. If you're short on time, just skip to the companies you're interested in using the chapter links below. Right, now grab your vacuum packed milkshake, strap in, sit back and shut up as we boldly go into space stocks.
Iridium Communications. Iridium is a very hard chemical element, brittle, silvery white, with the second highest naturally occurring density of any metal. It's also the name of one of the largest global satellite communications and satellite phone companies on the planet. The backbone of Iridium's service consists of a constellation of 66 Boeing-made satellites that provide what is widely considered the only true pan-global communication system. Its satellites are able to connect the captain of a mariner in the South Pacific to a researcher on the North Pole and have innumerable uses for businesses and consumers operating regions not traditionally covered by cell service. As someone who's done some kind of wild and frankly quite stupid trips in the past across Central Asia, riding horses, exploring mountain ranges and running across deserts, I cannot begin to tell you how useful sat phones are when you're in the ass end of nowhere and need a pickup. So it's little wonder to me personally that Iridium is one of the biggest space companies on this list, with a market cap of over $4 billion. After going public in 2008, Iridium pretty much traded sideways for a decade, ranging between $5 to $10 a share. Then, in 2018, coinciding with the launch of Iridium Next, which was a total overhaul of the original satellite fleet, the stock finally broke out into orbit. This next generation of satellites were a major upgrade, sent into space with the help of Elon Musk's SpaceX, a name you're going to hear throughout this video, offering new and quicker internet services for its users. By late 2020, share prices put on the thrusters to rocket up 83% in just 3 months, with buyers around that time including ARK, the somewhat infamous ETF managed by Cathie Wood. Taking a look at their financials, revenue has been increasing year on year, while both operating costs and costs of goods sold have remained fairly static. Net income may be negative since 2018, but we've got rising EBIT and EBITDA too. It's been keeping its debt levels pretty consistent as well, and all of this is worth bearing in mind. We think, after all, their satellites have a 15-year life expectancy, and there's a slew of new projects coming down the line, including a joint contract along with General Dynamics, potentially worth $324.5 million from the Space Development Agency. Whatever happens with the world, people are going to want to talk to each other, right? And Iridium is there to capture that demand, so long as it can keep up with the growing competition, which we'll cover soon enough. SES. It might not be the most well-known of companies, but SES has the second highest market cap of all the ones on our list and was founded as Europe's first private satellite operator. Their satellites aid in global video distribution and telecommunications, and they're known as something of a pioneer for technological developments in digital broadcasting and co-location satellites, which is basically just a fancy term for satellites in close proximity sharing a single orbital position. In fact, the Luxembourgish company seems to be so compelling that there's not been one, but 3 books written about their story, covering how the companies manage technical, political, and commercial obstacles to become one of the world's leading satellite operators. Their business model is split in two: SES Video, which provides more than 1 billion people cable TV, while their slightly smaller business, SES Networks, offers connectivity services for all sorts of industries: cloud computing, air and sea travel, governments, companies operating in the middle of nowhere. You name it, SES probably have it covered. And it has some blue chip clients to boot too, sporting logos such as Amazon Web Services and Microsoft. On the financial side, SES share prices have had a bit of a bumpy ride as of late, down more than 60% over the past 5 years. The rise of Netflix, Disney, Quibi, all of those folk probably haven't exactly helped SES's cable division. That being said, fundamentals for last year were strong. 2021's net income was at 400%, and the stock has already rebounded 38% for the year to date in a generally bearish market where many others have fallen off a cliff. Looking to the future, SES is hoping the rise of 5G could help it jump to warp speed, recently striking a deal with Verizon to deploy 5G services in the US. Given 5G is going to be the standard for satellite providers soon, the company even renewed its set to expire spectrum rights on a bunch of its fleet to get in on the act. That, plus the fact that it's been around since 1985, clearly SES knows how to weather a storm. Not your massive solar sun flare storm perhaps, but your average run-of-the-mill bear market storm? Yes, I think so. Aerojet Rocketdyne. Aerojet Rocketdyne was making rockets before they were cool, if that's even possible. In fact, it wasn't even a rocket company to begin with, it was called General Tire and Rubber Company, just making tyres for Ford Motors. But then, at some point, some clever clogs was like, hey, you know what, why don't we make things that go boom through the sky? And so from 1945 onwards, Aerojet moved forward with the goal of making jet engines, eventually pivoting fully towards space technology. Its propulsion systems have been seen on many prestigious rockets and spaceships, including the Space Shuttle. They were also the folks that powered NASA's Cassini spacecraft's plunge into Saturn in 2017. Investors were so impressed at the time that the stock rose like 30% in a couple of weeks. Speaking of which, Aerojet Rocketdyne has been publicly traded for 2,000 light years. Wait, that's a measure of distance, not time, but anyway, General Tire and Rubber was established in 1915, and us folks at TradingView have New York Stock Exchange data for Aerojet going back to 1968. Share prices reached all-time highs of $51.60 in 2020, but it took a bit of a fall more recently, thanks to a potential $4.4 billion acquisition deal with Lockheed Martin falling through because of the Federal Trade Commission's concern that their attempted consolidation of rocket technology presented national security and defense concerns. Stock-wise, Aerojet Rocketdyne has posted consistent fundamentals, things like gross profit, revenue, EBITDA, all rising over the past few years, albeit at a slightly methodical pace. This performance seems to be reflected in the share price. The business is up 90% over the past 5 years, but after the failed buyout, news of upcoming plans and deals have been a bit thin on the ground lately. Hopefully it's just a quiet patch though, and we'll be hearing more rocket blasting updates from them soon enough. Viasat. If you've ever used the in-flight internet on an aeroplane before, then there's a good chance you took advantage of Viasat's impressive array of satellites. This Californian-based space company runs the operations on 4 orbiting craft: Viasat 1, Wild Blue 1, Anik F2 and Viasat 2, securing a high-speed satellite broadband network that provides internet access across America. It also runs in-flight Wi-Fi across a range of airlines such as JetBlue and Delta Viasat 1, so you can Netflix and chill at 32,000 feet. Well, Netflix anyway. The business was founded all the way back in 1986 and has been publicly traded under the VSAT ticker for decades, IPOing back in 96. That's a full year before the cinematic masterpiece that is Final Fantasy VII enthralled video game fans worldwide, if you measure your time by Final Fantasy releases as I do. Anyway, now with a market cap of well over $2.5 billion, Viasat is one of the biggest satellite companies in the world, largely thanks to smart business moves like those deals with the airlines, the acquisition of companies like internet supplier Wild Blue, which has its own satellite, and data encryption firm Stonewood Group, plus some hefty government partnerships to boot. In 2021, it posted revenues of $2.3 billion, of which 1.1 came from government contracts. However, it's also seeing some stiff competition in Earth's apparently crowded orbital space with the emergence of SpaceX, backed by that certain Twitter-buying billionaire. In fact, it was pretty miffed at Elon Musk when he started pinging thousands of low Earth orbit satellites about, which power SpaceX's Starlink's internet system, and bringing it into competition with Viasat's higher orbit, slower internet sats. Viasat went even so far as to sue the Federal Communications Commission last year, claiming it failed to protect the environment due to things like light pollution and created unfair competition when it approved Elon's plans to pump so many satellites into space. Sadly for Viasat, judges rejected the case and said SpaceX could continue shooting out satellites like they were Fast and Furious movies. However, hundreds of astronomy professors have also since raised concerns about the proliferation of Elon's shiny spacecraft in the night sky and its potential impact on astronomy and scientific progress. But it isn't all litigation for Viasat. They're planning to provide global coverage for their various connectivity and data services with the launch of a trio of high-capacity broadband satellites in early 2023. Eutelsat. This French-born satellite company made first contact back in 1977, operating as a pioneer supplier of communications satellite technology for the European Space Agency. Today, Eutelsat is one of the biggest satellite companies in the world, pulling in revenues that only two other public satellite companies, SES and Viasat, can boast of. It was originally intended to serve a handful of European countries, then expanding eastwards into, if you'll excuse the very valid pun, Soviet satellite states after the fall of the Berlin Wall. But once it got a taste for the expansion, it didn't stop. Today, Eutelsat is now all across the world. Starting in 2014, its journey as a public company has, it's been navigating a bit of an asteroid belt. Eutelsat has been in a downtrend ever since its price tanked 36% in May 2016, wiping $2 billion off its market cap, thanks to the company cutting its outlook due to competition and expecting prices in its data service to drop 50% in the foreseeable future. It even said it will start sharing satellites with other satellite companies. Okay, but hey, you did have a deal with Facebook back in 2015 to launch an internet satellite over Africa, right? What happened to that? Well, it blew up. Well, technically, the SpaceX rocket it was on blew up, and so then it consequently blew up as a result. All part of Elon's Twitter long game, I bet. No, that is a joke. Even so, Facebook and Eutelsat picked off where they left off in 2021, announcing a new deal set to provide Wi-Fi in 12 African countries. The bright and shining news kind of stops there, unfortunately. Gross profits and net income, EBITDA, etc. have all been sliding for years. More recently, the business has received criticism from people in France due to its continued ties with Russian television channels. It's claimed it can reach 50% of TV homes in Russia and the CIS. Globalstar. American satellite communication company Globalstar operates constellations of low Earth orbit satellites for the purpose of satellite phones and low-speed data communications. They serve both businesses and individuals, their Spot series being one of their most recognizable product ranges with a focus on two-way communication and being able to send SOS messages where there's no cell network. Pretty sure I used one of these on another trip where we went pack crafting in Mongolia. It was very cold. Stock-wise, Globalstar has history. The first iteration of the project was founded back in 1991. It IPO'd in 1995 and filed voluntary Chapter 11 petitions seeking protection from creditors in 2002. It got a new owner a couple of years later and ultimately went public again in 2006. Since then, it's had a tumultuous ride with deep slumps and some wild spikes. Looking at its balance sheet, revenue hasn't increased since 2017, but cost of goods sold, which is already higher than revenue, has, creeping up by nearly $30 million in the same time period. There also seems to be some chunky interest payments going out there too, so... On the other space myth though, the company recently announced a new business deal with a large global customer to create a new communications network following on a few months after they publicized that they had a new potential customer who'd stumped at more than $300 million to finance the purchase of 17 new satellites. Reputable outlets like Quartz are even speculating it could be Apple. So is there potential here for a brighter future? Possibly, if true. Rocket Lab. Let's be honest, if you're thinking about investing in space stocks, you're probably doing it because A, you watched Star Trek The Next Generation a dozen times or so, or B, you started out as a NASA or Elon Musk's SpaceX fanboy or fangirl, but they're both not public companies, so... If that sounds like you, Rocket Lab might be one to grab your attention, because it's literally a business designing, building and launching rockets. It's been around since 2006, although, like many on this list, only went public last year, going from Peter Beck's New Zealand-based startup to American $2 billion plus public company with a NASA contract status. Since 2017, its two-stage, partially recoverable Electron rocket has launched 26 times with 23 wins and 3 failures, which is pretty much inverse my average Call of Duty kill-to-death ratio. The company's now generating over $60 million per year in revenues, putting satellites into space, 146 up so far, on behalf of a host of blue-chip entities like Canon and the United States Space Force, as well as other space companies on this list like Spire and BlackSky. Since going public through a SPAC, that's Special Purpose Acquisition Company, or blank check company merger, in August 2021, which valued the company at $4.8 billion, the stock has sadly blown up on the launch pad, at least for the moment. Its shares are around half the price of its initial listing. As you'll see throughout this video, this is a very common story for new space companies. Boy meets cheap and quick way to get onto the public markets. Girl meets 2022's Scylla and Charybdis of inflation and high interest rates. The result? Trouble in Alpha Centauri's nearest neighbour. Still though, Rocket Lab's may be worth following. Its Electron rocket was designed for lifting up smaller satellites into orbit, but its upcoming Neutron rocket will carry larger payloads, putting it into direct competition with the elephant in the airlock, SpaceX, and their much touted Starship, for the most lucrative space contracts out there. Neutron is currently scheduled to have its first launch in 2024, so that might be a year to bookmark in your decade-long Hubble telescope-themed calendar, if you have one.
Are we done?
Maxar Technologies. Maxar Technologies are living proof that you can do a hell of a lot with satellite technology. Going public in 2017, the business specializes in the manufacturing satellites that take high-res photos of the Earth to map global changes, using geospatial data to sell to organizations and governments. According to Maxar, they supply 90% of the world's geospatial data to the US government. Rumour has it they got the gig by emailing Joe Biden a high-res picture of himself wandering around the White House rose garden smelling the flowers. I'm obviously joking, that is not true, and do not quote me on it. But what is true is that today their images are carried regularly by global news outlets around the world, for example Russian convoys first entering Ukraine in February 2022. Despite such global pickup, it's not had the best run on the public markets. From January 2018 to January 2019, Maxar lost over 90% of its share value thanks to a pretty bad run of earnings, made worse by a bit of a PR disaster because of the crashing and burning of its WorldView 4 satellite due to a major failure in its control moment gyroscopes. The satellite was only worth $85 million of their $2 billion revenue pot, but the failure contributed to $377 million lost in discontinued operations and a bad look in the media. In fairness though, Maxar eventually got a $183 million insurance payout in spring 2019 due to the failure. Since then, it's recovered some altitude, posting green fundamentals last year, no doubt helped by a deal with NASA to power a space station called the Lunar Gateway. Today, it's rocketed 700% from those dark days to find some stability slap bang between its all-time high of $63 a share and its all-time low of $3 a share. What does the future hold for Maxar, you ask? Well, it bought out Vricon's geospatial intelligence software company for $140 million in 2020, so smart space data and intelligence defo seems to be what it's wanting to build going forwards. So don't get on the wrong side of Maxar, then. Echostar. Echostar is a global provider of satellite communications and a company that's had operational satellites for more than 25 years. Tell me again, what does satellite communication solutions actually mean, you ask? Well, James, you know when you're watching the news and they're broadcasting live about what's been happening and where, and you're getting it on your television? Well, I sure do. Well, those media outlets are likely using satellite comms. But it's not just the media. Via their Hughes network systems, they're also providing high-speed satellite internet services to over 1.3 million subscribers in the Americas. So you can play Fortnite even at your reclusive Uncle Fred's cabin in deepest West Virginia. Although not all customers are convinced by said service. Echostar may be a true veteran of the space industry. I mean, its logo font even looks like something out of Blade Runner. But like many of the old-timers, they can be accused of having a rather sleepy few years of late. Their last satellite launch was back in 2017, and its new Jupiter 3 satellite, built by Maxar Technologies, now won't be delivered in time for its end-of-year launch on a SpaceX Falcon Heavy rocket. The company was banking on this to relieve broadband capacity constraints in the Americas, but it won't hit orbit before the first quarter of 2023. All of this is sort of reflected in the stock price, which has been rather uneventful, slowly sliding down over 50% over the past 5 years and down 9% over the last year. Then again, it's not like the demand for playing Fortnite or 24-hour news is going away anytime soon, so their next launch might shift the fortunes, or it might not. And now for something a little bit different. Did you know that TradingView has been to space? Well, almost. We may have not passed the Kármán line, but we were the first to send a Bitcoin chart 21 miles above Earth on a hydrogen balloon. And do you know what we did after? We did what any meme-loving, inflation-fearing trader would do. We made NFTs out of them. You can still check them out on OpenSea using the link in the description below. But now back to our scheduled programming. Virgin Galactic. Oh, holy flying spaghetti monster, where do I even begin with Virgin Galactic? Well, probably with Sir Richard Branson, because this whole kit and caboodle starts with him. In case you don't know him, Sir Richard is a larger-than-life British billionaire who started out selling records, then airline flights, and then he made a music label, then he got into the rail franchise business, London Euston to Preston in about 2 hours, it's not that bad, and finally back in 2004 he founded Virgin Galactic. The aim of the business was and is to provide adventurous and, let's face it, extraordinarily wealthy tourists with glamorous rides on rocket-powered planes to the edge of space and back. Back then, he thought commercial services would commence within a couple of years. And that proved out to be a little bit optimistic, to say the least, as 18 years later, he's still not ready for regular commercial flights. However, the company has proved the concept in a glamorous and attention-grabbing way, Sir Richard himself jetting into space in front of the world's cameras back late last July. Actually, not space, Unity 22 was in fact 11 miles short of the height many people use to demarcate space, the aforementioned Kármán line. It all really depends on what you count as space, but that could be a whole other video in itself, so I'm going to leave it. Getting back to the topic at hand, here we've got a proven CEO with a track record of building incredible brands, a kick-ass product that looks like something from 2001: A Space Odyssey, and massive media interest. That must mean this stock's an outright winner, right? No, not exactly. Space shares are down over 80% since those heady all-time highs in July last year, and aside from the general market downturn as of late, here's a few potential reasons why. It's not commercially live yet and keeps delaying when it will go live. The latest estimate is that it will start launching customers by 2023, but it has pushed this schedule back before, several times in fact, so there's no guarantee it won't do it again. Each delay means it pushes back when it will start receiving meaningful operational income and so burns through more cash reserves. Then it has to either issue new stock or take on new debt to raise funds to keep going. Neither are attractive propositions for investors. There's also been mixed signals at the top. Chamath Palihapitiya stepped down from his position as chairman quite suddenly at the start of the year. Richard Branson himself has cashed out around $1 billion worth of equity from the business, nominally in an effort to support his other business ventures during lockdown. Still, all of this brings uncertainty and investors hate that. Number 3, the product itself. Some analysts have argued over the long-term market for such high-priced luxury. I mean, the ride itself costs $450,000 for 3 to 5 minutes of continuous weightlessness. $450,000 for 3 minutes. And it might just be me, but there are significant cheaper ways to have an enjoyable 3 minutes. That was the negatives. Let's look at the positives. Over 800 astronauts have recently signed up for flights to the tune of $150,000 in a deposit each. You do get to go to space, and did I mention how beautiful the ship looks and the spaceport looks? And let's not forget, when it comes to world-changing experimental technology, it's probably best not to boil the ocean. Start with the rich, make your product a niche but highly desirable status symbol, and then expand your offering over time to everyone. It's a business model Tesla has proven can work, so why not Virgin Galactic? Planet Labs. What would it be like if we had high-quality images of the entire Earth that got updated every single day? What kind of information would we uncover? Would we be able to spot trends in the melting of ice caps, in the progress of crop cycles, in town planning, or making sure my gardener is keeping my lawn mowed while I'm on vacation? Who am I kidding? I'm a city-dwelling millennial. I do not have a garden. But apart from this last point, these are the questions that Planet Labs, founded in 2010, is hoping to answer. They do this with a series of 200 satellites that are constantly flying around our planet snapping pics. Great theory, bro, but what's it like in practice? Well, you'll certainly be sick of special purpose acquisition companies by now, but that's exactly how Planet Labs went public, with some backing from Google nonetheless. It originally had a valuation of $2.8 billion. It's now got a market cap of 1.6. It's not great, but it's way better than some we've covered today. The long and short of it is, the company's still young and not profitable and probably won't be for the foreseeable future. They're hoping for 2025, but some analysts are not too sure. AST SpaceMobile. SpaceMobile. Oh, I wonder what that company does. Yep, you guessed it, SpaceMobile helps keep our cell phones working, filling all the coverage gaps anywhere traditional wireless networks don't exist or become overwhelmed. They aim to do this by building global broadband cellular networks in space that operate directly with standard unmodified mobile phones, so your ma and pa can always ring you wherever you are and you haven't got any excuse at all for not picking up that phone. Like many companies in this video, AST SpaceMobile is something of an infant. A toddler first founded by Abel Avelin in 2017 and headquartered in Midland, Texas. They only went public by merging with blank check company New Providence Acquisition early last year. And like many of the SPACs on this list, their stock has had some turbulence as of late, riding the market crests and troughs to end up roughly where it started a year ago. A quick look at the fundamentals might unveil some clues as to why this is the case. For example, last year the cost of goods sold outstripped total revenues by nearly 300%, and that's not even factoring in operating expenses. But like so many on this list, it is a young and growing company in an unproven sector, and so low revenues are something to be expected at this stage as it looks to establish its presence and grow the market for space telephone connectivity. Added to this, news like its May announcement of an agreed experimental license with the FCC, that's the Federal Communications Commission, allowing for US-based testing of the Blue Walker 3 satellite, and it seems like the company is taking its first firm toddler steps forward. The goal of that test service is to connect Blue Walker 3 directly with unmodified 2G, 4G and 5G phones from hundreds of miles away. Astra. Ad Astra per aspera. Through difficulty to the stars. And when it comes to difficulties, Astra has had its fair share for sure. On the face of things, it's an exciting proposition, a Californian business launching real rockets historically from the Pacific Spaceport Complex in Alaska, but also more recently from Cape Canaveral Space Force Station. Their aimed for selling point is cheap rockets and lots of launches. They're working towards daily launches by 2025. However, all that ambition has translated into a 60% share price drop this year alone, since the SPAC merger with Helicity valued it at $12.35 per share back last July. It also got properly dinged at the end of last year when Kereside Capital released a short report that held no punches. Here's an extract.
We are short shares of Astra Space, a $2 billion space launch company formed at the peak of the 2021 SPAC bubble, with no revenue, no track record of reliability, and no established market for its undersized vehicle. A story stock that's yet another example of the questionable businesses going public via SPACs. Astra faces massive obstacles in its quest to develop a viable business model.
The report goes on to highlight what it claims is Astra's poor positioning within an overcrowded market for small launch vehicles, and the fact that Astra has yet to overcome developmental hurdles necessary to successfully launch even a single satellite into any of the emerging broadband mega constellations. That being said, other analysts have noted that while Astra may indeed still be in the pre-revenue stage, it's maintained a strong liquidity position and order backlog, which could indicate healthy cash flows coming through in the next few years. OHB. Us Europeans, well, I'm British, so do I count anymore? Europeans have quite a few space companies too, don't you know? We've covered SES, we've covered Eutelsat, and now we're covering OHB. The company's been around since 1958 when it was a marine systems outfitter, hence the original full name Otto Hydraulic Bremen. It pivoted to the space industry when the couple Christa and Manfred Fuchs took over ownership in the company in the 1980s. Today, the business develops, builds, launches and operates low-orbiting and geostationary small satellites for scientific applications, communications and terrestrial observation. Its Italian division is even helping out with the creation of the Giant Magellan Telescope, a ground-based mega-telescope that will be 10 times as powerful as the Hubble telescope. So let's zoom into the company's financials for a moment then. And what do we have here? Oh, it is one of those rarest galactic formations ever, a public space company that's been around since 2001. And as you'd hope with any business which has managed to survive 20 years in the public markets, we can see here some steady and incremental but not moon rocketing growth, up 680% since IPO, but admittedly trading sideways for the past 3 years or so. Still, in a sector full of SPAC failures to launch, a steady eddy might be the thing you're looking for, especially given the business's close working relationship with the European Space Agency, which seems to be sending them business every other month. Satellogic. So here's a unique one. Satellogic is creating a live catalogue of Earth. The Argentinian company specializes in Earth observation nanosatellites weighing only 80 pounds. That's about the mass of a slightly rotund black Labrador. These chunky canine-sized cameras are designed to take high-resolution images of Earth, and the project is actually working with the Ukrainian government and its allies to provide satellite data to help protect citizens caught up in the ongoing Russian invasion. In terms of how their stock has been performing, really it might be a little bit too early to tell, since merging with SPAC CF Acquisition Corp 5 back in, or is that V? CF acquisition called V actually, back in January 2022, we've seen some steep declines and big rises. At the time of recording, it's got a $450 million market cap and has barely generated any revenue yet. It did recently add 4 more satellites to its fleet though, currently bringing its total to 26 operational satellites. By the end of 2023, Satellogic claims it's expecting to have over 60 satellites in orbit, offering weekly world remaps, and by 2025 they aim to have over 200 satellites in orbit to provide daily remaps of the entire surface of the Earth and up to 40 revisits of points of interest per day. 40 photographs a day. It's like my wife. BlackSky technology. BlackSky takes incredibly real-time high-res shots of the world, like people sitting on park benches picking their nose and eating it when they think no one's looking. And presumably some more useful stuff too. Because in reality, these photos are critically important for a huge range of industries, from logistic companies tracking maritime shipping and road transport, to intelligence and security agencies, to companies in the mining and commodity sectors, to those needing general mapping solutions. All these businesses need regularly updated information on where things are and what's happening via those eyes in the sky. And BlackSky's specific selling point is its rapid turnaround of data and the high return rate of its sats, which means the number of times in a day the camera takes a picture of the same area to provide more accurate information. It's a bit like Satellogic then. BlackSky was created in 2013 as a subsidiary of the privately owned spaceflight industries, but was spun off to merge with the SPAC Osprey Technology acquisition in 2021, listing on the New York Stock Exchange. However, since its debut, BlackSky's stock has been, oh well, you've guessed it, haven't you? You're very clever, Clogs. It's on a steady downtrend. I mean, what are these? Space stocks or water slides? The reason, you've heard it all before, young companies, low revenue, new tech, immature markets, generally bearish market sentiment at the moment, doom and gloom, blah, blah, blah. Nevertheless, they recently put the boosters on and unveiled a huge $1 billion 10-year electro-optical commercial layer contract, not quite sure what that is, with the US government's National Reconnaissance Office, alongside fellow space imagery specialists Maxar and Planet Labs. Investors loved it, BlackSky's stock rocketing 97% in a single day. Could more of these deals be coming down the pipeline soon? Redwire. What does Redwire do, you ask? It offers critical space solutions and reliability components for the next generation space economy. What does that mean? It makes and sells space stuff. Things like solar system ready solar panels, astro plant growers, zero-G 3D printing modules and the like. Yep, not everyone can be your rocket-obsessed Virgin Galactics or SpaceX's. Somebody's got to do the grunt work, helping keep those space lights on, astronaut lunches grown and components printed to ensure all the very important scientific experiments run smoothly. The stock has been, sadly, in an extended re-entry since merger with the SPAC Genesis Park acquisition last year, and is now down 60% to date. Like with so many on this list, it's a super new business model and the products are evidently not in high demand yet. Last quarter, the cost of goods sold amounted to 84% of the total revenue generated, and that's before you add on a 20 million or so for operational expenses. And the crazy thing is, those stats are actually pretty good. They're good numbers compared to others we've talked about here today. But again, what we have is a company without solid sales figures, and everything is about growth potential, and apparently investors just aren't feeling it right now. That being said though, stuff is pretty important, especially if instead of popping into your local Target to get something you need, you have to get someone to put it on a huge ass rocket and fire it into space to get it to you. So Redwire might be one to keep an eye on as the space industry matures, especially as any glance at the news feeds will tell you this isn't exactly the most widely talked about company right now. Momentus. Momentus claims to have space transportation as its core service, with the goal of helping customers optimize the destination of space. This basically means they build tugboats in space, nifty little vehicles that move satellites around low Earth orbit or take them from low Earth orbit into geostationary orbit, or using cheap and cheerful water plasma rocket propulsion. The first company to do so. Sounds epic, right? And a clear USP. Well, don't count your space chickens before they burst out of your chest. Momentus is a familiar story by this point, down over 70% year to date. Why? I'm sounding like a broken record here. It's still really early days for the company. They've only just conducted a first demonstration of its Vigoride orbital transfer vehicle flight. atop a SpaceX Falcon 9 rocket at the end of May 2022. With no real sales revenue to speak of, investors will be looking for clearer signs of significant commercial interest before this company can head to the moon. Spire Global. Spire Global is a space data company. It uses a constellation of low Earth orbit satellites, our trusty LEOs, to identify, track and predict maritime weather and aviation data, and it's launched over 150 sats to support its network since its founding in 2012. The business was the brainchild of graduates from the International Space University. Yes, that's a real place. It's in France, look it up. Peter Platzer, Jérôme Capar and Joel Spark wanted to launch a series of satellites into low orbit to democratize space and share data. Their strategy is based on designing and building multiple satellites while offering a SaaS model for businesses requiring maritime, aviation and weather data tracking and analytics. But the recent outlook has been rather poor. The firm merged with the SPAC Navsite in 2021, debuting on the stock exchange with a market valuation of $1.6 billion. However, despite a huge array of satellites, Spire Global has seen a run of missed revenue targets and issued poor performance, leaving it with a market cap of just $230 million at the time of this recording. It did, however, see a stronger 2022 Q2, reporting revenues of $18.1 million. That might be an 86% bump year on year, but it's still pretty tiny compared to all the other companies that we've covered today. Looking ahead, it's recently secured a 5-year, multi-million-dollar deal to provide weather forecasts for reconnaissance awareness solutions provider TCOM. So maybe there are sunnier days just around the corner for Spire.
So what does this all mean then? Well, it's evidently abundantly clear that we're in brand new, uncharted waters right now. Over 50% of the companies we looked at today only went public within the last 2 years, and they were all via, let's face it, somewhat damp squib SPAC mergers. Even outside of space stocks, SPACs have been struggling across the board lately. Data analysis firm Audit Analytics looked at 232 businesses that merged with blank check companies since 2020 and found that over 10% now had ongoing concern warnings, which basically means the company's fiscal outlook for the next 12 months is pretty sketch and they might go bankrupt. SPACs were seen as an easy way for companies to raise money on the public markets, first and foremost to fund growth and then worry about the pernickety detail of profit at some later point. Problem is, it's 2022. Inflation's got the markets in a headlock and high interest rates are giving these high-growth, loss-making companies a proper wedgie. So it's little wonder to me that all the companies on our list are currently down an average of 66% from their all-time highs. Then again, we are talking about space. Space, it's humankind's gateway to new celestial bodies and eventually new economies on those celestial bodies. So intuitively one feels the longest term upside could be incalculable. Even on a nearer term projection, Morgan Stanley estimates that the space industry is going to rocket up nearly threefold to a $1 trillion valuation by 2040. So for the bold or the patient, as well as the highly risk tolerant, there may be trading and investing opportunities in this mass of new businesses to explore. However, as I imagine they say in rocket scientist circles, when it comes to public markets, the devil is all in the launch point and the re-entry. Best of luck.